Ladies and gentlemen, welcome back to the channel. Today was again not a disappointing day. The stock market got some pretty aggressive news from Fed speakers as well as economic data. That's going to be a big portion of this video, but on top of that, there's a lot of news on Tesla today. So there's just a lot of news that we need to get into that will affect your money if it has not already. Guys, let's get into this video. If you have not already, hit that like button and subscribe to the channel right now. I mean, today, why not do it today? Today's a good time to hit that like button and subscribe to the channel. Now, let's get into this information. So Tesla stock down about 6% today, including the move in after hours. You're down over 6%, about 6.3%, give or take. Tesla stock is dropping as well in after hours, and it doesn't look so pretty. Now, what is exactly going on with Tesla today? So, Tesla fires dozens of employees in retaliation for organizing, complaint from labor group alleges. Apparently, you can get fired for trying to organize against your company. It makes sense after all. Y'all know what happened in 2021. If you organize against powerful entities or people, you're gonna get punished. And that's exactly what is happening to about 30 employees over at Tesla. Now, I don't think this is as much as like a fundamental development as it is just a bad precedent, right? It doesn't look good. Okay, so there's that. This is the real news on Tesla today. So Tesla is now recalling 362,000 vehicles for full self-driving flaws. Now, they go on to say this is happening a couple different ways. That essentially Tesla, instead of like getting into a lane that's not a turn lane, if that makes sense, to stay in a driving lane like through a light, the Teslas sometimes stay in like the far right lane, like the turn lane, and go through the light. Not good. Sometimes Teslas do not come to complete stops at stop signs. Not so good. And there was something else, to be honest with you guys, but those were the big ones that really stuck out to me. But a couple things other than that as well. There was a couple minute things that Tesla cars do on autopilot that is forcing this recall, and it is a recall on autopilot. Tesla did say that they are going to essentially do an update through the air, like through the cloud, through the internet, to fix this problem. So hopefully it's not an issue that continues for a while. 362,000 vehicles is a lot. Keep in mind, it's not like Tesla is really going to pay out too much on these recalls. It's not like people are getting their money back. So I would be a little bit careful how you read into that, right? I don't think it's a big event, fundamentally speaking. But again, it doesn't set a good precedent. It does not look good for Tesla. Now, let's get into what is happening here on the day, because it's been a very big day. So we had PPI that came out today, and that was really a big weighting negative thing on the day, right? Or weighted negative thing on the day. If we go ahead and look at these actual numbers, go ahead and refresh this, tradingeconomics.com/calendar. If you guys are not hooked up on this, you definitely want to. It breaks down all of the major events, Fed speakers, literally everything you want to know in an easy way to understand it. So we got PPI month over month for January. You were expecting a positive 0.2%. This is producer price index, or you could call it producer price inflation. That's how I like to look at it. That's literally what I call it if I talk to someone about PPI, producer price inflation. And it came in at 0.7%. Now, why this is a problem, not only did CPI and core CPI miss pretty much across the board, PPI is the most correlated data point to PCE. PCE is the most important data point to the Fed. So with PPI going up this much, it's a pretty big beat, right? You were expecting 0.2, it came out at 0.7. That's pretty big. It's going to translate into PCE, the Fed's preferred measure of inflation, to go higher as well, and it might go higher by a large degree if the PPI is any leading indicator, in which it is the most forward-looking data point to PCE. So keep that in mind. Now, you also got building permits that came in at 1.339 million. You were expecting 1.37 million. So did come in a couple hundred, maybe like 40, yeah, like 40,000 less than expectations. I don't know where I was going with that one. So not necessarily a good thing. Now, the Philadelphia Fed Manufacturing Index, this was a bad one. Forecast -7. It came in at -24.3. Manufacturing, shoo, going straight down, falling off a cliff, according to the Philadelphia Fed. Again, not a good data point for a soft landing, or as people are saying, no landing at all. Same thing with core PPI. Month over month, you were expecting 0.2%. It came out at 0.5%. Not good. Initial jobless claims, yet again, beat expectations. You were expecting 198,000. It came in at 194,000. Not good as well. So those are really the big data points that came out today. All in all, reiterating that inflation is probably going to be here a lot longer. The Fed's going to have to raise rates a lot longer as well. Now, what really caused the markets to actually sell off was Fed Mester in the morning. She came out and said that she was in favor of going 50 basis points at the last Fed meeting. And that was earlier in the day, like 9 o'clock, 9:30, right when markets started trading. Sold off a little bit on that. And then the markets are like, hey, Fed Mester, she's not important. Who cares about what she has to say? But then Fed Bullard at like 3:20, I'm not sure the exact second it came out, around 3:20 today, came out and said the literal exact same thing, that he favored 50 basis points at the last Fed meeting. And even though, you know, financial conditions are loosening a little bit, he thinks it's because inflation expectations are actually going down, that people think the Fed is going to get inflation down. But at the same time, we might have to raise by 50 basis points at the March meeting. So it was kind of that good and bad, if that makes sense, coming from Bullard. But that 50 basis point rate hike argument for March set the precedent. And I mean, if you get the federal funds rate to 6%, hold that for a year, that's a lot different than 5% for a year. Those 1 percentage point increases above 4% start to make a very big impact on lending as well as the economy. So not good what we've seen today, and that did cause the sell-off in the markets, and that is pretty much all that did happen today. Now, you did get earnings from a couple companies. Redfin down about 5.36% in regular trading, down 4.22% at the time of recording this video. You also had DraftKings up 6% after hours after some good earnings, guys. So that is pretty much going to do it. If you want to take a look at Tesla just here briefly, you did break under $200 just in after hours trading. You're back above 200. You're at $200.56 per share, and it's been pretty much slow and steady to the upside as of the last couple of days and couple of weeks, but overall it's been pretty aggressive. So to see a pullback to, you know, 190, 195, that's kind of what I'm expecting from here. I think the days of 100, 120, even 150 probably over with. I hope not, because I would love to buy a lot more Tesla right now, but I don't think you're going that low. I think you're probably going higher sooner rather than you're going lower sooner, guys. So that is going to be all for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.